Scalping can be a real roller coaster, but with the right tools, it can be a profitable one. Today, we're going to dive into a super simple strategy that uses just 2 free indicators from TradingView. The cool thing about this strategy is that it's super adaptable. It works on any trading pair and any time frames, so you can use it no matter what the market is throwing at you. Let's see if we can crack the code together and find the winning formula. Alright, let's get started. Head over to the TradingView and grab a 15-minute Bitcoin chart. We're going to add a nifty little tool called the Trend Trigger Factor. Think of it like a supercharged version of the relative strength index. It's plotted and scaled with key levels at plus 100 and minus 100. When the indicator crosses these levels, it signals potential trade entries. It's a great way to identify when the market's momentum is shifting. Unlike the RSI, which can give you false signals, the trend trigger factor is more reliable at pinpointing significant trend changes. The best part about this indicator is that it keeps you in the market for most of the time. This means you don't have to worry about missing out on those big moves. Of course, it's not a foolproof system, but it can be a valuable tool in your trading arsenal. Adding it as a breeze. Look for the indicators section at the top of TradingView. Click on it and a search bar will appear. Type in Trend Trigger Factor and hit enter. Now that we've added the Trend Trigger Factor indicator to our chart, let's make a few tweaks to make it easier to read. Head over to the indicator settings and click on the Inputs tab. The default values here should be just fine, so no need to change anything. Now let's get to the Style tab. Here we're going to customize the colors of the Trend Trigger Factor. Let's change the TTF option color to green, red, and white respectively. This will make it super clear when you're in a bullish, bearish, and neutral zone. While you're in the Style tab, take a look at the other options. You can adjust the line thickness and transparency to make the indicator even more visible on your chart. Play around with these settings until you find a combination that suits your trading style. So we've got this handy Trend Trigger Factor TTF line that's colored green, red, and white to help us spot different trends in the market. Keep an eye out for when TTF line shoots past the plus 100 level and turns green. That's our cue to draw a vertical line on the chart, marking where a possible buy signal happens. On the flip side, if the TTF line dips below the minus 100 level, turning red, it's time to look for a potential sell signal. Again, mark the spot with a vertical line and get ready to jump into a short trade. But listen, there's no such a thing as surefire way to trade. This strategy can't guarantee you win every time, which is why we'll pair it with another indicator to help filter out weak signals. Now, before we get into that, I gotta tell you about the TradeGenius YouTube channel. We've got over 350 profitable trading strategies that you can use for free. You'll definitely find something that matches your style, so be sure to subscribe. Alright, let's talk about our second indicator, the Moving Average Convergence Divergence, or MACD. It's a popular and versatile tool that helps us spot trends, measure momentum, and find good entry points. To add the MACD to our chart, head over to the indicator section and search for MACD and pick it from the list. Okay, let's get our MACD ready to be our trusty confirmation sidekick. Pop open the MACD settings and hit the Inputs tab. Time for some tweaks. First off, switch the fast link to 100 and the slow link to 200. This way, you'll catch both short-term and long-term trends. Leave everything else alone, but make sure to turn on the wait for time frame close option. Now let's move on to the style tab. Here's where we'll give the MACD histogram a makeover. Set the MACD histogram to columns. Then make the first option green, turn off the second and third options, and make the last one red. We'll only need the histogram and the zero line for this strategy, so disable the MACD and signals options. Now let's recap the game plan for our simple buy-sell strategy. When we see a potential buy signal, the TTF line hops above the plus 100 level, the MACD has to back us up. If the MACD histogram is above the zero line and green, we've got our confirmation. Time to go long. To protect your trade, set your stop loss below the recent market swing low. And for taking profit, aim for 1.5 times your risk. And when you're looking for a potential sell signal, keep an eye out for the TTF line. If it crosses below the minus 100 level, that's your cue. Next, we'll need our trusty MACD to confirm the signal. For confirmation, check if the MACD histogram has dipped below the zero line and turned red. If both conditions are met, it's time to consider entering a short position. Now, for managing your risk, you'll want to place your stop loss above the most recent swing high in the market. And for your take profit target, use the same risk to reward ratio we discussed earlier. Something like a 1 to 1.5 ratio is a good starting point. Just remember that no strategy is perfect, and it's always important to adapt your trading plan to your own risk tolerance and market conditions. With that said, the simple combination of the TTF and MACD can be an effective way to identify potential opportunities.